A lot is going on in the 2022 housing market, and we've got to talk about this, right? The affordability crisis. The average American right now is scrambling financially and cannot seem to meet the expected mortgage payments for the median house price in 2022. I mean, we saw the past couple of years where the interest rate has been really low, but right now we're facing high interest rate. I mean, double interest rates from what we saw just last year. And the Fed is still on track to increase the rates this month. So what exactly are you thinking right now? Do you think you're better off renting a property or purchasing a new property, especially if you're a first-time home buyer? I want to hear from you. Let me know your thoughts in the comment section below. So in today's video, we're going to be unpacking the latest information when it comes to mortgage rate and affordability in hopes of getting you the rightful information for you to make the best decision for your financial situation. So if this is your first time stopping by this channel, welcome. Consider subscribing now and giving this video a thumbs up to help other people find this information quicker. And also to help you with your financial wellness and financial success. So let's jump right into this report from Fox Business. This is a very shocking report, right? The median mortgage payment, according to Fox Business, is up 66% from a year ago. 66%. I got a quick question for you. Did your income go up 66% within the past year? I mean, for most people, I'm sure the answer would be no. But here's the deal. The average interest rate is still going up, right? Everyone is seeing the inflation, more and more increase in price of goods and services. But the home you live in or the home you are hoping to purchase is farther and further away from your reach. So another question here is the American dream still existent when it comes to purchasing a home, the white picket fences and all of that? Do you still feel like this is within your reach? I want to hear from you. Because right now, this is a staggering number, right? For most people, especially the millennials out there, right? 66% from a year ago. And according to this report, the rising rates and elevated home prices are pushing more would-be buyers out of the market. So now more people who are planning and saving for a purchase in 2022 are basically looking at these numbers and saying, look, guys, I cannot afford this. 66% from a year ago. We're going to break down the data from the National Association of Realtors, basically going back 2 years to show you what really has happened and the impact this is going to have or having on your bank account, especially if you are a first-time home buyer. So just take a quick look at these two if you are thinking about renting, right? Inflation hits the rental market as higher mortgage rates, limited supply pushes up prices. This is according to real estate experts, as reported by Fox Business. So the rental market is not safe either, right? We're seeing increase in rental prices while we're seeing an unprecedented or just unexpected mortgage rate increase. So I want to get your thoughts in the comment section below. So according to this report, experts are warning that higher rents will have ramifications on the U.S. economy when it comes to discretionary spending of the average American. The more money you have to put toward your housing, that decreases the amount of money you have to take care of other wants and needs. So this is really putting some financial stress to many households, right? This is creating financial stress for many individuals and households. Do you think your housing budget has gone up lately? And do you feel happy with your housing situation right now? Let us know in the comment section below. So I'm going to quickly go through this data, right? We're going to dig into the data just for you to see the extent things have changed, right? So in 2019, this is before the pandemic, the median American single-family home or the median single-family home price in America was roughly $275,000. And the mortgage rate in 2019 was around 4%, 4.04%. And the monthly payment on principal and interest based off of these numbers was around $1,054. So roughly $1,050 a month, right? This is the monthly payment. And back in 2019, this monthly payment was only 15.7% of the median family income. Median family income back then was $80,800. So roughly $81,000 back in 2019. So this is the number that I want you to keep in mind, right? 15.7%. 15.7% was basically the percent of your income that went to your monthly housing or your monthly mortgage payment, your mortgage and interest. Now, fast forward to during the pandemic, right? 2020, something happened with mortgage rates. We did see interest rate get slashed and mortgage rates came down in 2020. But in 2020, something also happened with home prices, right? We did see home prices go from $275,000 on average, median home price, not average, to around $300,000 in 2020. Now, the interest rates declined from 2019 at 4.04% to 3.17%. And the monthly payment for the average American household or the median American family was $1,035. So $1,035 in 2020. Now this represents 14.7% of the median family income in 2020. Remember, 2019 was 15.7% of the median family's income. Now this went down 1%, right? The portion of your housing, the portion of your income that goes to housing basically was slashed by 1% from 2019 to 2020. Now something interesting happened in 2021. When everyone realized that the world was not crashing, the world was not falling down, guess what happened to home prices? Home prices shot up. So we saw home prices add a whopping this is the median price, right? It added a whopping $57,000. So we saw home prices, the median home price in America went from $300,000 to $357,000 in 2021. And interest rates went even further below what we saw in 2020. So interest rates went down to 3.01%. Now leaving the average American family or the median American family with $1,200 roughly in payment. So this was not a significant increase given the price of homes, right? But this represented 16.5% of the portion of your income that goes towards housing. Remember, in 2019, that was 15.7%. In 2020, that decreased to 14.7%. And in 2021, we did see a 16.5%. But just wait until you see the numbers according to this report for the 2022 portion of your income that goes towards housing. And this is why affordability remains an issue, right? And I kind of get what the Fed is doing right now. The Fed is trying to tackle the red hot inflation with basically increasing rates or by increasing rates in hopes that prices are going to come down. But we still have supply issue when it comes to the housing market. There's not enough housing, right? However, we're going to talk about what this means for the first-time home buyer who decided to wait. No judgment, but if you decided to wait for price of homes to come down in 2022 or hoping that price of homes will come down in 2022, that's happening right now. However, you basically got your wish, right? However, mortgage rates have doubled and will likely keep going up for the rest of 2022 based off of what the Fed is doing, even though mortgage rates are not directly correlated with the Fed rate increase. But I'm not going to go into all the mechanics of that. But for the sake of this video, I just want to highlight the affordability issue that we're seeing right now in 2022. So according to the report from the National Association of Realtors, the data that we're seeing right now when it comes to housing affordability index, the median price of home in July of 2022 was around $410,000. Now, this came down from the number we saw in June of 2022. The median price home in 2022 for a single family home, existing single family home, was $421,000 roughly. And this has come down to around $410,000. However, or maybe not however, at the same time, we're seeing 5.48% mortgage rates. And as of today, we did see mortgage rates hit 6% or go slightly over 6%, 6.01%. That's the median, that's the rate that we're seeing right now, right? So what does this mean for the average American, or for the first-time home buyer, or for one who is looking to upsize? This is a problem, because even those who are looking to downsize cannot even downsize, because when you sell your property, you're going to refi, or you're going to finance, not refi. You're going to finance at a higher mortgage, which might end up meaning you're paying the same amount you were paying if you purchased your home when the rates were a little bit lower. So right now, when it comes to affordability, or the portion of your payment, the portion of your income that goes towards housing payments, as of July of 2022, you're going to be looking at 24.5% of your income that goes towards housing. This is for the median American family. So that's what we're seeing right now as of July 2022 data. So this means that we went from having a 15.7% of your income going towards housing in 2019 to 14.7% of your income going towards housing in 2020 to 16.5% of your income going towards housing in 2021, and now to a whopping 24.5% of your income going towards housing. This is the data as of July. Right now, I'm sure the number is above 25%, right? But this basically underscores or emphasizes, that we're seeing, a time where the average person cannot even keep up. And mind you, the income change, or the difference in income for the median family in America basically went from $80,000, roughly $80,000 in 2019 to about $84,000 in 2020, and to $87,000 in 2021, and $91,000 in 2022. This is this is a very small percentage increase as opposed to what we're seeing right now when it comes to affordability. So I want to get your thoughts on this in the comment section below. Do you think you're better off waiting till 2023? For those of you who are waiting on the sidelines and didn't purchase in 2020 and 2021, do you think you're better off waiting even longer for the home prices to keep declining if they keep going that way, right? We don't know if this is just going to slow down and then flatten out. Experts are saying we're not going to see a 2008 all over again. So I'm just really concerned about this data, and I felt like I need to share this with a lot of people out there who are wondering or confused on what to do right now. So if this applies to you, I want to hear your thoughts in the comment section below. Thank you for watching. Stay safe, and see you in the next one.